Thanks everyone for joining our Change in Behaviour series this morning. This is going to be our final in the series. All good things do come to an end. But today we have a really interesting one to finish on. We have Alex, Nathan and Emily all presenting this morning, and we're going to be looking at pubs, the opening of pubs across the UK, and 1 month on from non-essential retail stores opening. So should be a good one for everyone. As always, if you have any questions, please put them into the chat. We will be recording this session, so if you miss anything, you can go to our YouTube channel afterwards and rewatch it, and we will send around the deck as always afterwards. And if you haven't been receiving that, please put your email in the chat also, so we can make sure you're on the list. And with that, I will pass over to Alex to kick us off.
Thank you, everyone who's joined again today. As always, I'll give a quick update on the UK's ever-changing virus situation, a couple of slides on consumer confidence, and then I'll hand over to Emily to give an update on how retail is recovering. And she'll hand over to Nathan to talk about how things have been going since the pubs have opened. Yeah, so you can see on this view, generally the green line, which is our 7-day rolling average of new cases in the UK, has been heading in the right direction. There was a bit of a blip around late May, whether that was a coincidence, that was just a couple of weeks after Boris Johnson saying return to work if you can, remains to be seen. But we are seeing a few little shimmies on the line as well. If you just look to the very right-hand side of that chart, which the data takes us up to Sunday, just gone, looks like we could be on the edge of a little shake-up. So if you jump onto the next slide, which zooms in on just the last 4 weeks, we can see how the progress has been panning out over that period. Let me just move the little video icon so I can see what I'm talking about. If we track from left to right, you can see around the middle of June, there was an increase in the purple line. So this is the rate of change week on week. So it's an increase that takes us a bit closer to zero there. And if we cross the zero line, that is when we're seeing an increase in cases week on week. So if the purple line starts to go up, it gives us a little bit of a warning that the green line is going to either slow down and flatten, or worst case scenario, as we've seen in the US, in very extreme circumstances, start to go back up again. We see an increase in cases. So what we had been seeing right through June, primarily, and back into May, was the purple line tracking downwards nicely. Now, at the moment, the last few weeks have had it hovering somewhere around the -20 to -40 mark, which is a pretty good rate of change. It's where countries like Italy and Germany were a few weeks, for several weeks actually, before relieving lockdown. So we are taking very, having to take tread a fine line in lifting these lockdown restrictions. So we can see even in the last week, the rate of change has started to creep back up again. So while we're not seeing more cases week on week, it's just saying that the rate of decline in those cases is slowing down. So introducing the mask mandate, not quite a law, but the advice should make a difference, and is a very sensible measure to be bringing in as soon as possible. So a couple of slides on consumer confidence. We've seen a bit of a change in this last wave. Oh, sorry, onto the next ones. Where our sentiment towards household finances has actually been the best. It's at the highest point now since we started tracking. So even before coronavirus kicked in, when we had our baseline run in February, which was mildly pessimistic, but in line with most of the major tracking studies of consumer confidence. So to actually see it tick up like this at the start of July, we're going into field again with it tomorrow for a wave for the second half of July, is interesting and positive, especially as it comes in parallel to a slight dip, maybe more of a flattening in terms of sentiment towards the economy in general. And that the economic announcements, so this sorry, I should say this fieldwork period was the 3rd to the 6th of July. So this came in, I think, then just before Rishi Sunak's announcements to help the hospitality industry and to slash VAT 15%. So it'll be interesting to see how this looks in the next wave as people may be getting more accustomed to getting back out into shops and the hospitality sector being able to open. And if we move on to the next slide, it gives us a little bit of an indication about where they might be thinking of spending. So at the moment we're seeing just over a third tick the box for the green line and the pinky purpley line, so the saving and the debt, so the kind of financially responsible aspects. If they were given some free money, what would they do with it right now? So 36% would save it or pay down debt. But spending on home has been very resilient throughout all of this. So whether that is actually moving home or furniture or garden or decorating or DIY projects, all those things, home is still in a robust situation. And the only other one to reference on there is probably the holidays sector. So now even Boris Johnson is talking about staycations and recommending people take a break in this country. Ideally, I think that is to prop up hotels and restaurants in some of the tourist resorts that have been struggling, especially over the last few months. So we'll keep running with this. If anyone has any particular questions, happy to field them afterwards. But that leaves me with nothing more to say but to hand over to Emily to talk about the recovery of the retail sector.
Sweet, thank you, Alex. And I am sorry if anyone can hear my laptop kicking up a massive fuss. It really hates Zoom calls for no reason. Yeah, I'll just give everyone a quick update while we're a month into the non-essential shops opening up and this return to retail. So get to the next slide, please, Nathan. So this is the weekly market share of footfall for the 4 verticals we've measured. So you can see the green line is pre-coronavirus, which is from measuring from a week in early February, and then we've got the first 4 weeks after that. Reopened a month ago now. So you can see that sports retail has upheld its biggest bit of the market share throughout, and especially now in this last week, it's had a little shoot up again. And that makes a lot of sense. Gyms still aren't open while other things are. People are still needing to get their fix for working out at home, in their gardens, in the park, etc. And then clothing obviously is kind of always popular. The interesting one that I think I pointed out in the last changing behaviour as well was that compared to the pre-COVID-19 times and lockdown, electronics is still doing better than it was in terms of the market share of footfall, better than it was before, and particularly in this 4th week, which makes a lot of sense because people are having to sort of upgrade the entertainment in their home a lot more. Like Alex was saying with the surveys, people are doing a lot of home improvements, etc. So people also want things like new laptop, new TV, a projector for entertainment because you can't go to the cinema anymore, things like that. And then as well as that, obviously, most people are still working from home. So people need the equipment, laptop, second monitor, all that kind of stuff. So it makes sense that it's doing, in terms of the market share, doing better than it was pre-coronavirus. So we go to the next slide, please, Nathan. And this is just showing the footfall percentage compared to before coronavirus. So if you imagine pre-coronavirus is 100% of your footfall, this is the percentage of that we're seeing. So for example, in week 1, department stores saw 17% of their usual footfall that they would see before coronavirus. So you can see both the table and the graph showing the same thing, just in different ways. But you can see pretty clearly that it's a really positive story for everyone. Everyone's been consistently going up. I think the recovery is fairly slow. It's only a few percentage at a time, but it's still really positive, and I think it makes a lot of sense. People are still quite wary of going back. I think in YouGov yesterday there was a poll that was suggesting that I think 55% of people feel comfortable going back to non-essential shops, but still I think about 42% being a bit cautious about it. So I think it makes sense that the recovery is going to be slow, but it's still very positive. And linking back to what I was saying about electronics doing quite well in terms of market share, they are having the best recovery out of the 4 verticals we've looked at. which is really cool. And I think that's partially to do with what I was saying about how people want better entertainment systems and better working from home equipment, that kind of thing. But also because in terms of going to a physical store, out of those four, electronics is probably the most useful, because most people won't know what they need in a good laptop, that kind of thing. And going into a physical store, you can get the advice on it. Whereas for like going to buy some clothes, you don't really utilize a shopping assistant that much. And then I think the slower recovery for department stores is probably due to them being a longer shopping experience. People probably don't feel super comfortable being inside for that long, because obviously they sell so many things. You have to be inside the shop for a very long time, whereas you can kind of nip a bit quicker into the other ones. So I think department stores are going to remain kind of the slower one in terms of recovery. But yeah, overall, we're seeing pretty positive story for everyone in terms of recovery. This first month has been a positive story, so we'll see if it's continuing to plateaus or whatever, but we'll be updating it every week. So we'll see what goes on in the future. And I think that's everything for the update for me. So we'll move on to Nathan.
Cheers, Emily. Yeah, so that provides actually a really nice bit of background going into looking at some of the insights that we've gotten from the pubs reopening for the first week and a bit, because a lot of the themes that both Alex and Emily have touched upon sort of come through here. So we can see, first off, this is looking at the opening weekend. So the first couple of days, which included what people deemed as Super Saturday with the pubs reopening. There was a lot of buzz in the press, people worried about people flooding back and the sudden risk of the transmission of coronavirus. They were similarly to when home stores reopened, these pictures of people queuing outside and hundreds of people trying to get in. But actually, it seems like a lot of the sort of hubbub around it actually might have been overblown. So on the left-hand side, what we're looking at is the same as the metric that Emily showed on the previous slide. So looking at the percentage of footfall as a percentage of the normal level. And what you find is that for all pubs, so that includes independents as well as the chains that we've tracked here, footfall was only 37% of the normal level. And that's despite what we saw in the press. That's despite, what was meant to be a mass of people returning to pubs. Actually, footfall was very suppressed. You see that Marston's and Star pubs seem to perform the strongest. Well, these guys typically, they're not as concentrated in London, and they're also often more likely to be, say, your neighbourhood pub than your city centre pub, which is where Green King, Fuller's, Wetherspoons seem to be really suffering. And as a response, when we look at the right-hand side, you can see that this has given an opportunity for Star pubs, Marston's, to secure a higher level of footfall as a total share. But there's no one homogenous experience across the UK. And when we break this down by regions, we can see that actually there's really differing fortunes, but also for chain pubs versus the total pub landscape. So the big variable factor there will be the impact of, say, smaller regional chains as well as the independent pubs. So what you can really see is outperformance for all pubs versus total chain across the UK. And it's perhaps not surprising given a lot of the motivations for people going back, a lot of the ways in which people have adapted their behaviour in terms of takeaways, ordering and supporting local restaurants, local bars. So it seems that people have been very keen to go back to, say, their local, where they know the landlord, they know the people behind the bar, they know the people whose livelihoods depend on their money. And that may be explaining a lot of the spread that we're seeing in performance. When we look at the different regions and how they're doing, we can see that in the southwest, southeast, there seems to be that biggest spread between all pubs and total chain. But we can see that really areas in the north seem to be performing the weakest. And when we start to have a look at the spread of COVID, we can see that the northwest and the northeast were really hit very hard. Particularly the northeast, I think, had the third highest rate of excess deaths and one of the highest per capita rates of COVID cases. So it does seem to be that the scale of COVID in these particular areas is weighing upon the performance that we're now seeing. So the southwest, lowest cases per capita, really seeing outperformance. And again, we've also looked at this by sort of settlement cluster, so breaking things down based on population. And interestingly, we can see that London actually comes out slightly ahead of these other settlement types, particularly when we're looking at the chain pubs. Perhaps some of this is to do with the particular age, the affluence of people in London. But we're also seeing that the smaller towns are outperforming the rest of the big cities in the UK. again, maybe pubs in this area are better equipped to deal with a post-COVID world. So you think about the size of your average pub in London or Birmingham compared to the size of the average pub in a small, you're probably talking about a lot more space, a lot more capacity, and people feeling safer, because consumer confidence, as Alex touched upon before, has so many elements. And I think I've sort of beaten the dead dog on this one, is that, you know, you've got the financial aspect, but in this post-COVID world, the health aspect of consumer confidence really takes on a new aspect and becomes so much more prominent. And so this also seems to be feeding into the recovery that we're seeing. When we're here, we're still talking about the opening weekend, but when we look at the split between visitors, whether they went on Saturday or Sunday, you know, whether Super Saturday truly was living up to its name, we find that it's not really. You know, the balance between those 2 days is a lot more than we're seeing on a normal weekend. Typically, Saturday performs a lot stronger when we look at all the chains, but also at top line level, there's usually a bit more of a spread between the 2 days. You know, this does provide a bit more, maybe a strategic opportunity for the likes of Marston's, Green King, Fuller's. I know Marston's do a lot of sort of carvery. Green King, Fuller's also offering food, so maybe that's going to be a good way to bring people in. Particularly, you know, looking forward to August, when the government's going to be footing the bill for 50% of food and soft drinks Monday to Wednesday. This could also be a good strategic opportunity for these guys to boost footfall through the week. And then, so I've said that, you know, Saturday is performing weaker as a share than normal. And when we start to have a look at the footfall pattern by hour, you can maybe see a bit of why this is. So the yellow line shows a sort of normal level that we'd expect on a weekend. And actually what you can see is the late night Saturday footfall's really been eradicated somewhat in the opening weekend, because of course, you've not got the same level of facilities open in the evening. You've not got all the bars and nightclubs that go on to the late hours, and that diminishes, you know, people's willingness to sort of stay out, go on the lash, and so people changing their drinking behaviours. You know, you can see that there was a real bump when it comes to opening time, so people really rushing in for that first pint, a bit of the early evening dinner drinking crowd, but then it's really dying off. And looking at the second weekend, this pattern also held up, so it seems that for the time being, whilst these late night venues are closed, footfall and the opportunity is going to be concentrated a lot earlier than we would typically see. And in terms of having a quick look at what this audience looks like, they're a lot younger than the usual audience that we get in pubs. So we're talking here, nearly 50% are under the age of 36. And when we lump in that audience as well, under 46 makes up 2/3 of the total audience. So really, it's a lot younger audience than we typically see. Of course, the risk of COVID is going to play into this. Also, potentially a bit of restlessness, particularly from the younger audience, who may be back with mum and dad, you know, for longer than they've anticipated and just eager to get out. In terms of what these guys have also been up to, so they seem to be what we sort of define as early embracers. People are really keen to return to normal and just get back onto some level of familiarity of what they once had. So we see that they were 7 times more likely to have visited retail stores in the opening week than the average UK consumer. They're also 5 times more likely right now to be going to physical grocery stores. So they really are very quickly reflexing back to what was once familiar. And then when we open up the perspective a little bit more, so looking at the first full week, so wouldn't include the first weekend, but the first full week. But looking at weekend 2, what we find is that actually here on the left-hand side, we've got the visitation change weekend over weekend. And you can see that Green King, although they were the worst performing in the first weekend, they really did see a surge in footfall. Of course, opening up more venues helps, but also potentially people feeling more comfortable returning to pubs. Of course, you know, people working from home at the moment, the fact that, you know, the capacities are limited, maybe people are looking more towards Monday, Tuesday, Wednesday, you know, more than they usually would, which we do actually see in the data. And so people are starting to, you know, really spread out their visits through the week. But only really Fuller's saw a drop off in footfall. Again, almost all of their pubs, I think it's 95% are in London, so potentially suffering there. When we look at the week as a total versus a normal week, you can see again, Marston's star pubs really are the chains that are performing strongest. So Marston's had about 50% of the normal level of visitation that they would typically pre-COVID. So really strong performance there. You know, ticking all the way down to about 25% for Fuller's. But with this weekday footfall, it really has helped to boost their visitation. and get it somewhere towards a bit more of what our normal impression would be. And as I said, there's good momentum from the second weekend that this will continue to move forward, particularly as areas reopen and people become more confident and more familiar reintegrating themselves into the physical landscape. When we look at the regions, again, a lot of this picture is quite similar to what I showed before, but actually with the full week perspective, you can see that really it is the south that is outperforming for all pubs. So you see Southwest London and Southeast are the top 3 performing regions. And so you really start to get more of that regional divide in performance. Some of that may be to do with the persistence of cases in some of these areas, maybe the financial impact. You think of areas like the East Midlands, which have performed quite poorly, which Leicester falls into. So, COVID seems to be ever present in terms of the recovery and something for brands to factor in. And then, as I alluded to a couple of slides earlier, we're starting to see some slight differences in weekday footfall. So you're seeing that Monday, Tuesday, Wednesday, slightly more important than they usually would. Again, as I say, people looking to spread out their visits a bit more, particularly if capacity is limited, as well as the greater ease to hide a hangover. Not my own intention, but I'm not sure many people look at that as an opportunity. And seeing Sundays again boost, with more of this social drinking, more of the opportunity for pubs to push their food and become kind of like, restaurants, particularly as a lot of restaurants remain closed or are under a lot of pressure. Pubs may actually start to ease their way more into the food sector, a trend that we've seen over the last few years. But of course, I won't go into this in detail here. We've also looked at how this impacts different retailers across the different areas of the UK. You can really see that, just looking at green good, red bad, there is a really real variance in performance by these different regions. So you can see that Marston's, who performed really strongly, they've gained 20% share in the East Midlands, gained 19% share in the West Midlands. So really outperforming in some of those areas that we actually saw more soft performance relative to the South. And so there really is a spread of opportunity in some places where a lot of these key chains need to close the gap. And also by the different types of settlement clusters. So, again, Marston's performing really strongly in those sort of 200 to 300k settlements, whereas Wetherspoons are doing a bit better in some of them, some of their more traditional playgrounds, but also in that sort of 20 to 30k population area. But that is my spiel. If we do have any questions, obviously we're happy to take them here. Otherwise, please feel free to follow up with us or one of the team.
Great, thanks, Nathan. Nothing much to add. I think it's interesting to see that across a lot of these verticals, whether it's returning to pubs, whether it's the supermarkets, whether it's some of the early signs we're seeing for QSR sector, and a lot of the retail stuff Emily noted at, most things appear to be approaching about 40% bounce back of what we were seeing pre-COVID. So where we've talked previously about it being very much the realm of the early adopters picking up on things in the opening couple of weeks, we're kind of nudging into the mainstream now, I think, which is very positive news for the retail recovery. It remains to be seen whether it's positive news on the health front long term. But yeah, we won't be doing any more of these webinars, but we'll keep tracking a lot of this information and sharing it with the team. So if any of you are on the call but not on the Bliss sales team in London and want to be kept up to date with this, just let us know. And that's it. Thank you very much for joining us today.
Thank you, guys.
Thanks, Emily, as well.